Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, keep in mind that there's risk involved with each trade that you take. No one trade is guaranteed to bring profits, so you want to manage risk in a way that makes sense for yourself, and we'll go through some ideas in that regard. There's some features built into our web trader order window and our app's order window that allows the risk management side of things to be quite a bit easier. So if we simulate some trades, we'll go through some of those concepts and tools within the order window. Also, keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can access our web trader platform simply by logging in here in the upper right-hand corner. That allows you to trade on your MT4 and MT5 accounts, but with our advanced tools and technologies built in that you don't have directly on the MetaTrader platforms. And our app, if you use the AvaTrade app, has the same functionalities and tools as well. So if you enter your email address and password in the login area, then you'll find yourself in the WebTrader platform. Our focus today is the fundamental side of things, and we'll do a bit of fundamental analysis, a couple 2-3 different types of fundamental analysis we'll try and cover today. And then obviously we'll look at the technical analysis along with it, just to make sure you're getting the entry points, exit points that you're looking for, that maybe the trend agrees with the fundamental news, etc. And that's kind of how you go from just using one tool to actually building a strategy with your fundamental analysis. So you're not just looking at one headline and making a decision, but you're putting together 2 or 3 bits of information maybe together to develop your strategy concept. Now, as we go along, if you have any questions, feel free to type those. I can see them as they pop up and address any questions or share any input that you might want to give with the rest of the audience. Now, one place that we definitely can start for fundamental news is the economic calendar. And I know most of you who've traded for a while, you've seen economic calendars, and you might be thinking, any investment website gives you a calendar. What's the big deal? The part of our economic calendar, which comes from Trading Central, that is key, are these tools over here on the right-hand side that allow you to do a bit of data analysis for the particular announcement you're interested in. To see, well, how have the movements moved in the past based on how these numbers come in, either at expectation, above expectation, or below expectation. How does that cause the movement on the charts to differ with different currency pairings? And so we can get that data within a few clicks, which normally would take you hours or even days to compile the data. You can use these tools within literally seconds to have that information for you to make some data-driven decisions on the fundamental news as it comes in. So again, combining more than one piece of information to make a decision. Now, we can take a look at today's announcements first. And so you pick the day or days that you want to look at announcements with the calendar here, and pick the countries that you would like to include and the level of importance that you would like. Usually the high-end announcements have larger effect on currency pair movements on the charts, depending how they come in. But with all else equal, the higher and medium level announcements tend to get more movement than the low end announcements. So I've left the low ones off, the ones that are deemed low importance. And so we see today out of the US, since those announcements have not occurred yet, we can take a look at these. We've got something that really has been moving the charts predictably in the past weeks, and we've gone over a number of times within these sessions, the initial jobless claims. And again, we'll cue off of this because there are some announcements at the same time, GDP numbers, durable goods orders, but the jobless claims really have been a focus of investors in terms of decisions that they're making with buying and selling. And we can see that when we analyze the past announcement with the percent movements in different directions. And so, keep in mind, we're talking about jobless claims. So the higher these numbers are, if they come in above expectation, that's typically bad economic news. And if it comes in lower than expected, less jobless claims, that would be deemed good news, okay, typically. So, just from a fundamental common sense perspective, if this came in, worse than expected, higher than expected, you might think, well, that would be bad for the US dollar then. And if it came in better than expected, you'd think, okay, maybe that'll strengthen the US dollar. So you can see the numbers come in and make your trade off of your own assumption. But sometimes assumptions are wrong. And you want to verify that maybe with another tool, which would be this data volatility analysis. And so when we click on this tool in particular out of this list of tools, the one that looks like a volume indicator, it brings up the volatility analysis tool for this particular announcement. So initial jobless claims, each of these candles represents when the initial jobless claims numbers came in the past and the direction of the movement of the currency pairing that we've chosen here. So we can choose Euro USD, we can choose other pairings, okay? And you can take the time to go over different pairings and see which one actually has the higher predictability movement and which one has maybe the largest movement in terms of average range movement, okay? And you pick what is best for your style of trading. Sometimes you'll see like, GBP USD has larger range movement, but less predictability in the percentages. And Euro USD might move slightly less pips, but have higher predictability. I've seen that trend. It's not always the case. So for each announcement, you can check the different pairings. For our sake, we'll leave it on Euro USD. You can pick different time frames after those announcements. Starting out, we'll use 4 hours. That's the largest time frame within this tool. And then we can qualify how did the numbers come in, meaning when the jobless claims come in bad news, meaning above forecast, what happens with this pairing? That's pretty staggering to look at these statistics. 100% of the time, all 5 out of the last year or so that we're looking back on these announcements, the 5 times it came in above forecast, meaning more jobless claims than expected, the USD weakened against the euro. The euro went up after 4 hours 100% of the time. It doesn't mean moving forward it'll be 100% of the time, but this is the extent to which we can use data. We can look what happened in the past. And then you can say, okay, does this align with my logical thinking too? Bad news out of the US, higher jobless claims, the USD weakened. Okay, that kind of makes sense. Considering the weaker the data is out of the US, the more likely they are to lower interest rates as well, which tends to have a weakening effect on a currency. So there's a few reasons you can put together to justify in your mind why this data goes this way, okay? But really, if you're doing truly data-driven trading, you don't even have to play that mental game. You can just look at the data and say, okay, if this comes in above forecast, it looks like the trend is the euro rises, and you can just trade off of that past data. So when the announcement comes in, if it's above forecast, maybe it makes sense if you get an entry point you like to try buying, because that's what the data shows the majority of the time would have brought you profit, okay? Now, you could say, yeah, but I'm only trading after the numbers came in. Maybe the movement already went this 42 pip range movement before I even get my trade off. And that can happen with some announcements. You can get 50 pips movement in the first 5 seconds after the numbers come in. So the question is, do I have time to get my trade off before these rises occur? And so if we look in the first 5 minutes after these announcements, the average range movement is 10 pips. You see here, 10 pips. Here's 10 right here, 10 pips. Most of them are under 10 pips in the first 5 minutes. And it shouldn't take you 5 minutes to get your trade off, right? You could trade within the first 5 seconds after you see the numbers, 10 seconds, 1 minute, waiting for the entry point you like. Maybe it spikes down in the first minute, and you know you want to buy because this came in above forecast. So I qualify this. If you get the entry point you like, it looks like in the past, 100% of the time after 4 hours, all of these ended up upward with an average range movement. You see here's 40 pips right here. Okay, this one went past 40. The average range movement, now range includes spikes down before they went up. The average range movement's over 40 pips. So clearly these ones must have spiked down in the first 5 minutes, 1 minute, 2 minutes before going up. Otherwise, we wouldn't have an average range movement that's as high as the largest rise. So clearly you have entry points that are lower before these went up because the average range movement's over 42 pips. Okay, so this is pretty clear. If this comes in above forecast, the statistics say buy if you can get the entry point that you like. Now, if I go, what if it comes in below forecast? Meaning better news than expected out of the US, less jobless claims. It's more 50-50, isn't it? It trends down, 57% down, but that's too close to 50-50 for me. 43% up, 57% down, 3 went up and 4 went down. That's not like 5-0 like in the other setup. So as this data comes in, I would be sitting based on this data saying, okay, I'm only going to buy on this announcement, and I'll only buy if the data comes in above forecast. I'll buy if I get the entry point I like in that first 5 minutes. If it comes in below forecast, I'm not interested. Why? Because in the past, it's 50-50. I don't know which way this thing's going to go. Okay? I'm less certain, I should say, which way this will go after a longer period of time. But this setup above forecast looks very nice with the statistics. So this is a way that you can find out which announcements do I want to trade off of and which ones don't I, based on the past movements. Okay, and also on your schedule. Are you available when these numbers are coming in to watch the numbers come up and to place your trade? Okay, these are the past numbers in this column. These are the expected numbers, and then the real numbers or the newest numbers come in this column as they come in. So if the initial jobless claims, for example, came in at 250, I'd be looking to buy based on the statistics we just looked at. Okay, and I'd be quickly trying to get my entry point. I would already have my trade set up on Euro USD, for example, or whichever pairing you look at and maybe like best. I would already have the order window set up only for buy, for the trade size I want. And as soon as I see the data, if it's the data that tells me I should buy based on the statistics, then based on this strategy, I would buy if I can get the entry point I want. Okay, so that's how I would go about step by step, being ready, waiting for those numbers to come in with my order window set up, ready to go. Okay, let's see if there are any other announcements today. We've got pending home sales. There's been a huge focus on the housing market. And earlier this week, new home was new home sales or new home permits. I think it was sales, new home sales. The permits were okay. The new home sales, I believe, had dropped dramatically. There was some bad data out of the US earlier this week, and I could go back and look to see exactly what it was, but trust me, the housing market showed some very weak data. And the market pulled down because of that quite a bit after those numbers. Now, as we look at pending home sales, these aren't home sales that have occurred, but pending home sales, will there also be a disappointment? Okay, if the new home sales missed, what about the pending ones? If it comes in higher or lower than expected, what has happened in the past? And I know it's a medium level announcement, but there's been quite a focus in the US on the housing market in particular because of the high interest rates. The US is trying to lower interest rates, but inflation has been sticky. It hasn't dropped to the target that's wanted just yet. Now, if we look at, again, Euro USD pairing is fine. We could take the time to look at other pairings, and you can on your own, but we'll stick with the Euro USD, nice tight spreads, usually pretty good predictability with this style of trading. Now, if I go above forecast, new pending home sales. Okay, so that sounds like good news if this is above forecast. Looks like USD weakens, Euro goes up. Remember I said don't always overthink things? And this is the opposite direction your logic might tell you. You know, good news out of the US you'd think might help strengthen the US dollar. In this case, when pending home sales are above forecast, which seems like good news, the euro strengthened 80% of the time. It's not like 50-50. This is a trend of some sort. 80% of the time, 4 out of 5 times, if the housing pending sales in the US are better than expected, the USD actually weakens. Maybe because the USD is a safe haven currency when there's fear, and the good news released fear, and so the USD may be weakened as US dollar holders decide, hey, let's buy stocks, let's buy other things, and so the USD weakens with that good news, potentially. You know, here I am doing mental gymnastics again to try and justify why the data shows this. But again, if you're doing truly data-driven trading, you don't have to do those mental gymnastics. You can just say, this is what the data shows. And the one time that it went down, it barely went down. After 4 hours, that's the drop. Just a hair of movement down, and everything else is way up. Okay, average range movement 44 pips. Looks like almost all of that range up. Okay, what if this came in below forecast? Look at the exact opposite movement. So this tells you that there's a direct effect, this announcement, because when it came in one way, it was 80% up. When it comes in the other way, it's 71% down. So it's the flip reaction. And the ones that went up didn't go up by much. And the ones that went down bigger. So not only is it down 71% of the time, it's down larger than the ones that went up. Okay, same with the opposite result when it was above forecast. So on this one, unlike the other announcement we went over, this one I would have the order window prepared, ready to trade in one direction or the other. I'll do buy or sell, depending how these numbers come in, whether above forecast or below. Again, there's no guarantee you'll win every time. But if you get the entry point you like, we can see that after 4 hours, there's certainly a trend up when these numbers come in above forecast and down when they come in below forecast over the past year or so. So this can be a really powerful technique to be able to trade a little bit maybe more robotically and less with emotions, trading off of the data rather than a feeling. Okay. All right, any questions, comments? I'll pause just for a moment. Okay, and I don't see any questions popping up, but if they do, I'll address them as I see them. Now, what else can we look at for fundamental news? What we just went over is just one strategy. You can find over the weekend, any weekend, for the upcoming week, look at the announcements, do what we just did, find the ones that you think give you the best advantage in terms of the past data, what it shows in terms of percent movement up and down based on how announcements come in. Find the ones that fit your schedule and that look the best to you, and try it out if you're confident that that might help you win a few trades. And what you'll probably do is zero in on the announcements that work best for you, that you have the best results with, and then that can become part of your long-term strategy set to trade on certain announcements each week, each month, as one leg of your trading strategies. Okay, and don't judge an announcement after you've only tried it once or twice. If you've tried each one 10 times or 20 times, now you can say, okay, this one I only won 7 out of 20. This one I won 13 times out of 20. And you start to see which ones give you the best success rate, and those are the ones you would use more long-term. Okay. Now, where else can we look for fundamental news here, right within our platform? We can go to the Market Buzz, and we can quickly find the latest news articles and information that's out there on the internet with a few clicks. Okay, again, saving you a ton of time from searching for information on different stocks or commodities or currency pairings that you might want to trade on. We can switch between categories here and find information on any instrument that we offer. So the larger the circle in the pictogram, the more it's trending online. the more we found information on it. Why would NVIDIA be trending the most all of a sudden? They just had their earnings release yesterday after the US market closed. They exceeded expectations again. The question is, did they exceed expectations by as much as people expected them to exceed the expectations? It's kind of an oxymoron there. If you expect them to exceed the expectations, then the expectations should have originally been set higher to begin with. So it's kind of a funny game that traders are playing. No matter where the expectations are set for NVIDIA, everyone expects them to exceed it, not just by a little, but by a lot, which means the real expectations are actually above the written expectations. Anyways, their numbers did exceed the written expectations, but yet you see it says the trend is stable. It's not predicting necessarily a strong rise or a strong drop. It says here, NVIDIA has a technical rebound back up, which is what it did, and there's the potential for it to drop back down. Okay, but they're not willing to say a percent change up or down. They're just saying the trend is stable. So kind of mixed situation fundamentally when you start to read the articles, okay? Here's an article about the CEO of NVIDIA saying that the DeepSeek effect is shaking it off, saying it's not a long-term driver of their success, etc. If you don't know what DeepSeek is, it's an AI company that found a way to create a chatbot and an AI product without the need for NVIDIA's expensive chips. And so what was driving the big demand for NVIDIA and their growth was the AI boom and the requirement for their advanced chips for running their AI programs for different companies, chatbots and such. And all of a sudden, DeepSeek found a way to use cheaper chips to get the same type of results from an AI chatbot, for example. And so that kind of hit NVIDIA off guard, and they pulled down quite a bit. They've bounced back up since then, but now all eyes are on those numbers from yesterday, and the traders are digesting. Did they exceed expectations by enough? Is there some weakness showing? And so this, of course, the CEO of NVIDIA, if you read the article, you can understand what he's saying better. So here's a summary of the article, and you also can get the entire article. So very easy to find the fundamental news and read the information for yourself to see, okay, do I want to buy or sell on this instrument? Okay, and so it's very easy to find the latest news. This just came in 20 minutes ago. Okay, you'll be ahead of a lot of traders by using this tool, because reading this article, this is information that wasn't available even 1 hour ago. So you read the article, scroll down, you'll find more articles. Okay, near NVIDIA earnings, near-term revenue remains bright. That sounds positive. So in terms of the earnings numbers that came out yesterday, if you read this article, maybe it talks positive about that. And you can read the source, who's talking about it, what do they have to say, what's their justification, and start to read these articles. And when the US market opens, you'll be ready. You have the fundamental news, the latest information to understand, do you want to buy or sell on this instrument? And the answer could be, I don't know, I don't want to do either. Or it could be that you were convinced by the fundamental news and you decide to trade. And combine that with the technical analysis that's here, and you can see maybe where the support levels are below if you decide to sell. You can see where the resistance levels are above if you decide to buy. Okay, the technical analysis is outlined for you already. So this is where, again, you have a trading strategy, not just one tool. You're combining multiple tools, the signals, the technical analysis that's outlined for you already, the articles that are there for you to read, and then deciding what you want to trade on. So very easy to make decisions once you inform yourself. And we could go on to look at Apple and all of the other stocks that are trending the most, and then we could look at crude oil and gold, etc. But you can take that time on your own and go through the market buzz and look at the tools or the instruments that you like to trade and see what is the latest news on those. And then that can help you make your decision. And a lot of times you'll also see that there is a prediction in that trend. Okay, for NVIDIA, it said basically that they expect the trend to wander sideways, which is kind of what it's doing right now. But many times you'll see a prediction, and we can go back there and I'll show you. You'll see a prediction in the technical analysis that there is a prediction of a large rise or a large drop from the technical signal. So whether it's Apple or whatever else we want to go to, let's see if this one has a trend analysis. This one says price may rise 10%. That's a lot different than NVIDIA's technical prediction. So they're both in the tech sector, but NVIDIA said, no real prediction up or down with the technical side of things. But with Apple, also in the US 100, it has a 10% prediction or trend that they think could occur in the upward direction. And you can see that breakdown of the technicals as well. Resistance levels up here that they're suggesting a take profit could occur at. Support level here. If it breaks below the support, then they say no more buy signal, then you think about selling. If it breaks below the pivot line here. So very informative technical analysis along with the fundamental news. Okay, and you can read articles. I saw it, if you scroll down, an article that Apple worked out a deal with India. There were some lawsuits, some problems with selling the iPhone there. They just worked out a huge deal with India. That sounds like good fundamental news. Okay, also here's another one, MacBook Air with M4 chip launching soon. So a new product launch. You scroll down, you see an article, actually not India, but Indonesia agrees deal with Apple that could end iPhone sales ban. So iPhone ban might end in Indonesia. That's positive news. It's positive momentum. And I swear I saw something about India as well, but I could have mixed up India and Indonesia. So you go through, anyways, the process, find a few articles that are most recent. It looks like 2 positive articles in a row and a technical trend prediction of a 10% rise. Now, all of a sudden, I feel better about this one than I did NVIDIA, because NVIDIA news was kind of mixed there and the signal wasn't predicting any direction. Here, it's a strong prediction upward with the technical signal and a couple nice positive articles right from the beginning here that make me think there's positive momentum maybe for Apple fundamentally. So when the US market opens, if you like the price, if you see a trend in the direction that convinces you, then it makes sense maybe to buy on this based on this information. Okay, but it's how you interpret the information using these tools that then decides what you will do. Okay, I'll pause again. Any questions, comments? Okay, so let's say we've decided on buying or selling on something here. Maybe you feel strongly about, and I'll just pick an instrument, gold. Maybe you think gold is pulled down quite a bit, technically speaking. And we take a look at maybe one-day candles and we see how many days of dropping. 1, 2, 3, 4 days of downward movement. You also could look and say, I see a support level here. Okay, one-day candles, this was resistance. We got back above and the candles became support here. This price level, it's hitting and bouncing back up. All these candles held one day after another day, holding at that price and then up. Found resistance at the all-time high once, twice, 3 times, 4 times before dropping back and finding support. Look, it's not a coincidence. It hit this exact price that we drew the support level on from over here. And as soon as it hit that price, look, what did gold do? It bounced back up. Okay, so we have a confirmed hold of this support level, a successful hold of the drop, and a bounce right off that support level. So technically speaking, this is a spot where you might put a stop loss below that support level if you were buying, right? Stop loss below the support level, so very little risk from the current price compared to if you put your take profit up at the resistance level near the all-time high, but before it, you've got maybe 2 or 3 times potential profit up to the resistance compared to what you have to risk to put your stop loss below the support. So from a technical perspective, it's an opportunistic spot to buy. And some people are purely technical traders. They would see this and say, okay, I'll buy, nice support level. And they don't care what the fundamentals are. Okay, you can find success that way many times. But now we can also think about the fundamentals. What do we know about gold? We could use the market buzz. We could have looked in the market buzz for articles on gold. Let's pretend we did. And we found articles saying, there's strong demand for safe havens like gold and the Japanese yen or something like that. The yen is a safe haven currency. If we saw an article alluding to the fact that traders seem to be bullish on gold, okay, we didn't do that, but let's assume we did. Then we might say, now we have more than one reason to trust this support level. Or maybe you're just doing logical reasoning saying, hey, there's a lot of fear out there about tariffs right now. And there is a lot of fear out there, especially in the European Union and the UK, about tariffs, and maybe in China as well, because Trump just said yesterday, and it, for a moment, started a crash on the DAX yesterday and other major indices. He said 25% tariffs are coming on the auto sector for the European Union. He said it yesterday. And boom, immediate reaction with a lot of instruments. So maybe that's enough for you to say, hey, that's a reason for gold to be in demand as a safe haven. There's fear about these 25% tariffs. And so now we found a fundamental reason, whether it's from an article or from more macroeconomic things like tariffs that we see the US president promising are coming, fear about that. And so you put that with the technical setup and you say, okay, this is a no-brainer then. Now I really think I should buy on gold, okay? And I'm not saying you should, but I'm simulating the process of how you would come to maybe that decision. Okay, so let's say the decision was to buy based on your understanding of the fundamental news and this nice support level in the one-day candles. So now I've decided from my strategy checklist that a buy is in order here. So now I'm looking at my take profit and saying, you know what? I'm not going to be greedy. It doesn't have to break the all-time high, which was above 29.50. So I'll say 29.45, which is even down here, okay, a little further. Okay, 29.45, right about there. That's 29.44.92, this line. So it wouldn't have to break past there to hit my take profit. So 29.45. It was just there a few days ago, by the way. It's not unheard of for gold to go back up there now. So stop loss, right here, I drew where I want my stop loss, below the one-day candle support level. If it breaks this support, then something changed with momentum, and maybe it keeps dropping. So I don't necessarily want my stop loss any further than that, because a technical breakthrough of this support level means something fundamentally must have changed to cause gold to break that support level. So in that case, I would want to get out of my buy, potentially. So stop loss at 28, I don't know, 28.70, something like that. 28.69, 28.70 is below that support level by a few dollars. So 28.70, stop loss. So I've got better than 3-to-1 potential profit compared to risk. Nice ratio. And this is what I said from the beginning. It's an opportunistic entry point from a technical perspective. What that means is I don't have to risk as much as I can make to get below key price levels or before key price levels with my take profit. Stop loss below the price level, take profit before the resistance level. So we have an advantage, technically speaking. Now, we just adjust the trade size. Here's the risk management part. Adjust my trade size for this technical setup until it's the amount that I'm comfortable risking. So if I want to risk, I don't know, maybe I risk 500 every trade or whatever that might be for you. 1% of your account or 2% or 0.5%. So if I do half a lot here, I'm risking 860. If I do 0.4, I'm risking 688. I think 0.3 or something close to that is going to be about 1% of my balance here. So 0.3, under 1% of my balance to try and make over 3%. Okay, I'm making better than 3 to 1 here, risking less than 1%, trying to make 1,700. I could be wrong on this 3 times and right once, and I'll still profit. Okay, this is what we call an opportunistic setup. And why should I be wrong 3 times and only right once if the fundamental news is on my side? Hopefully I can be at least 50-50 with this kind of setup, if not better. Okay, so we've got a trade risk managed. We've used multiple tools, including technical analysis and fundamental news and the risk calculation features within our order window to have a trade that's small risk, nice potential profit, hopefully in the direction that the fundamental news is blowing the price movement, and from a technical perspective, it's opportunistic. So I think this is a good place to stop. The points that I'm trying to make is that the more knowledge you have using tools like we offer within our platform and our app, the more you can bring your trade results hopefully to a higher win percentage, and in the end, hopefully a better P&L at the end of each day, each week, each month. All right, any questions before I end things? I'll pause for just a moment. Okay, well, thank you all for attending. I do see that those of you that were here from the beginning stayed the whole time, even though there were no questions. I must have been clear. All of you stayed with me for the whole session. So hopefully you found it useful. And I wish you luck with any announcement trading you might do today or tomorrow. And also just keep an eye on the big headlines in the market buzz as well. That can assist you with understanding which direction the fundamental winds might be blowing, and then it comes down to the technicals a little bit. So good luck with your trading, and I'll be back at it next week. All right, bye for now.